Hello everyone and thank you for joining today's True Trading webinar. I'm excited to be here with you. My name is Muhammad Azim from Traders United. First, there is disclaimer. True webinar house rules. Please take the time to read important rules for webinar attendees. Let me start by sharing a little information about myself. I am a certified elite wave analyst, having earned my level 1 certification back in the year 2012 with a score of 93%. This certification deepened my understanding of market behavior, especially through the lens of elite wave theory. In addition to my work as an analyst, I'm also an author and educator. I wrote Introduction to Elite Wave Theory, a book designed to help traders like you build a strong foundation in understanding the intricate structure of market waves. But my expertise does not stop at elite wave. Over the years, I have expanded my knowledge into broader market analysis, diving deep into market trends, chart patterns, and price action strategies. So, whether you are a beginner or an experienced trader, I aim to provide you with valuable insights that will help you navigate and succeed in the Forex markets. With that, let's dive into today's session. These are the main topics that we are going to cover inside today's webinar. Let me talk about macroeconomic events and data releases. I am going to cover previous week fundamental analysis. The number one is the core CPI M over M USA, and the second one is unemployment rate AUD USD pair. Okay, let us start with the core CPI first. On July 16th, 2025, we got the core inflation report, the core CPI month over month. MOM stands for month over month. So what is the core CPI? The core consumer price index or core CPI month over month tracks the monthly change in the price of consumer goods and services, excluding food and energy, which tend to be more volatile. This measure is a key indicator of underlying inflation trends in the US economy and is closely watched by the Federal Reserve when assessing interest rate decisions. Higher than expected core CPI readings typically strengthen the US dollar by supporting the case for tighter monetary policy. Lower readings may increase the likelihood of future rate cuts, which can weaken the US dollar and lift the Euro USD currency pair. Now, on July 16th, 2025, the core CPI report results we got is the previous number was 0.4%, forecast is 0.2%, the actual number we got is 0.0%. The core CPI came in well below expectations at 0.010%. So the forecast was that people were expecting 0.2%, but in reality, the actual data we got is 0.0%. So the core CPI came in well below expectations at 0.0%, signaling a notable cooling in the underlying inflation pressure. This outcome suggests that disinflation may be going and it's gaining traction faster than anticipated and could influence the Federal Reserve to take a more dovish stance in the coming months. So the potential impact on Euro USD based on different scenarios. The first scenario was that if the core CPI is higher than the forecast, meaning greater than 0.2%, which it's not, we were basically expecting a bullish drive in United States dollar, which supports a hawkish Fed stance, and euro dollar, likely drop. But what happened is, in reality, the core CPI came in lower than the forecast, less than 0.2%. That's the actual case. And this suggests quicker than expected disinflation raises chances of Fed easing later in 2025. And that's bearish for US dollar. And what we got a bullish leg in Euro USD. Let me show you the chart of Euro dollar currency pair. Now over here on 16th of July, we got overall bullish candlestick close inside daily time frame. And even after that, price action just keep going up over here. Okay, so based on the core CPI number, Euro USD actually moved higher because the number we got is less than 0.2%. Even if you compare it with the previous number, which was 0.4%, it's still below that level. So people were not expecting that. It was a surprise, and Euro USD actually moved higher. So the weaker than expected core CPI print triggered upward momentum or movement in the euro dollar pair as traders interpreted the data as a potential turning point for US inflation trends. The surprise cooling bolstered expectations that the Fed may consider cutting rates sooner rather than later, weakening the dollar and providing support to the euro. So the conclusion is the July 16th core CPI report was softer than forecast, increasing the likelihood of a more dovish Federal Reserve path. This outcome lifted the Euro USD pair as investors responded to the diminished inflation pressure and adjusted their expectations for future monetary policy accordingly. Traders will now look to Fed commentary and upcoming inflation data to reassess its rate cut timing and further implications for the euro dollar versus United States dollar. So uh, I think Euro USD moved to the upside. Uh, we got it because the reason was the number was 0.0%, the core CPI number. Next one is the July 17th unemployment report. So let's overview it. The previous number was 4.1%, and the forecast is 4.1%. The actual number we got is 4.3. Now let's talk a little bit about what is the unemployment. Well, the unemployment rate measures the percentage of the total labor force that is unemployed and actively seeking work. It is a key indicator of labor market conditions and overall economic health. If you get a higher number, that's bad for the economy, in simple words. A lower unemployment rate signals a strong job market and economic growth, while a higher rate may indicate economic weakness. Now, market had anticipated stability in the unemployment rate, expecting a repeat of June's 4.1% number. However, the actual print of 4.3% surprised to the upside, indicating a possible cooling in the labor market. The market implications and AUD USD reaction we got is under normal circumstances, a higher than expected unemployment rate is viewed as bearish for the AUD as it can lead to expectations of a more dovish stance from the Reserve Bank of Australia. However, in this instance, AUD USD moved higher. Now, let me show you the chart of AUD USD currency pair. This is the chart of Aussie dollar currency pair. And over here you see uh, we got the drop in price action, and then later the market moved up after that. So AUDUSD moved higher despite the disappointing headline, suggesting traders may have focused on the other details such as resilient full-time employment growth or improved participation rate. Repricing of US dollar expectations due to broader risk on sentiment, and market positioning and technical levels offering strong support to the AUD. So the key scenarios and potential reactions, if the unemployment rate is lower than forecast, meaning less than 4.1%, that's bullish for the AUD, usually, generally speaking. Now, if unemployment rate is higher than the forecast, meaning greater than 4.1%, that's typically bearish for Australian dollar and may fuel expectations of slower economic growth. Now, the unexpected rise in Australia's unemployment rate to 4.3% was initially seen as a negative surprise. However, the upward movement in AUD/USD post-release indicates the market may have interpreted the broader data as less alarming or was influenced by external factors such as global risk appetite or softening US economic expectations. For traders, it is a reminder that market reactions often hinge on context and narrative, not just the headline figure. Monitoring accompanying labour market components and the Reserve Bank of Australia's commentary in the coming days will be crucial to understanding where the Aussie is headed next. Next one is the euro, dollar, and US dollar Swiss franc. That's the previous week market trend. So let's take a look at euro, dollar, and US dollar Swiss franc. Now, regarding the euro USD currency pair, if you take a look over here, this is the daily time frame. Price action just keep printing higher swing highs and higher swing lows. And this trend is only going to change if price action drops below this old support area. Otherwise, to me, it is still an uptrend. As far as the US dollar Swiss franc is concerned, overall we keep getting decline inside USD/CHF currency pair. If I zoom in a little bit and delete this, you can easily notice that price action is basically trying to fall. To me, it's a downtrend. Okay. So overall, you see price action is, it just keep printing lower swing highs and a lower swing lows. So to me, it's a downtrend going on inside US dollar Swiss franc. Now, let's talk about current week fundamental analysis. So the number one is the German flash manufacturing PMI, the Euro USD. Now, the next one is the core durable goods order month over month. Let us start with the first one. German flash manufacturing PMI related to Euro zone, and the currency pair we're going to discuss is the Euro USD. So on Thursday, July 24th, 2025, the economic sentiment preview is that we are going to get the number related to German flash manufacturing PMI. Now, what is the German flash manufacturing PMI? The German flash manufacturing PMI stands for Purchasing Managers Index, is a key leading indicator offering early insights into the performance of Germany's manufacturing sector. It is based on a survey of purchasing managers who evaluate conditions such as output, new orders, employment, supplier delivery times, and inventories. As Germany is the largest economy in the Eurozone, its manufacturing sector plays a crucial role in shaping broader regional economic conditions. A PMI reading above 50 suggests expansion in the sector, while a reading below 50 signals contraction. Now, the previous number we got is 49.0. The forecast is 49.4, and the actual data not released yet. The economists forecast a slight improvement in the PMI to 49.4 from the prior 49.0. While this would still indicate contraction, it would suggest a slowing pace of decline, possibly hinting at early signs of stabilization in Germany's industrial sector. Now, the potential market impact on Euro USD, if the PMI is higher than expected reading, meaning we were expecting 49.4%, and the number we get is stronger and greater than the 49.4%. This that reading could ease fears about eurozone growth and reduce pressure on the European Central Bank, the ECB, to act dovishly. This would likely support the euro and push the euro USD higher. And if the PMI matches the forecast 49.4 number, then the result is in line, that's what we say, with expectations may produce limited movement in Euro USD, unless accompanied by surprises in other metrics such as input costs or future output expectations. Now, if PMI is lower than forecast, meaning 49.4 per number, and we get a number like, let's say, 48 or 47 number, then it means that's a weaker print, and that would point to deeper manufacturing troubles in Germany, potentially reinforcing a dovish stance from the ECB. This could weigh on the euro and push the euro USD lower. So the conclusion is the July 24th Germany flash manufacturing PMI will be a key event for traders watching the euro dollar currency pair. While the sector remains in contraction territory, any unexpected strength could lift the euro as optimism about eurozone recovery grows. The trend is already up in euro dollar currency pair, by the way. Conversely, another disappointing result may rekindle concerns about slowing momentum and ECB policy risk, dragging the euro USD lower. So traders should also watch accompanying data and overall market sentiment for confirmation. The next one is the core durable goods orders month over month related to euro economy. Now, what are core durable goods orders? Core durable goods orders, M over M means month over month, measures the change in the total value of new purchase orders placed with manufacturers for durable goods, excluding transportation items like aircraft, which can be highly volatile. This metric is a reliable indicator of business investment and future manufacturing activity in the US economy. Rising core orders suggest growing demand and confidence in the economy, potentially supporting the US dollar. A decline may indicate weakening business conditions and lower capital expenditure. Now, on July 25th at 12:30 p.m. UTC time, the previous number we got is plus 0.5%. The forecast is 0.0%. The actual data isn't released yet. It will release on 25th of July. Now the market expectations is, there's no expectation. It's a flat growth. They're expecting 0.0% in core durable good orders this month, reflecting caution among businesses amid uncertain economic conditions. A reading of 0.0% expectation, or if we do get that exact number, this signals stagnation in capital investment, which could raise concerns about economic momentum heading into quarterly third or the third quarter. Now, the potential impact on Euro USD is if the actual reading is higher than forecast, meaning we get a greater number than 0.0%, then that's a better than expected number, would indicate resilient business activity in the US, potentially reinforcing expectations that the Federal Reserve will maintain higher interest rates for longer. This would be bullish for the US dollar and could push the Euro USD lower. If the actual reading matches the forecast, we get the same 0.0% number. That's a flat reading, and likely a market is going to show us limited reaction unless accompanied by surprises in other related financial data such as headlines, durable goods, or revisions of previous months. Now, let's say we get a negative number, then that's a weaker than expected result would point to slowing investment demand and may fuel speculation that the US economy is softening. This would be bearish for the dollar, potentially lifting the Euro USD at least on a short term basis. So the conclusion is the core durable goods orders released on July 25th will offer important clues about the health of the USA uh, manufacturing sector and business investment outlook. With the euro already influenced by soft eurozone data, strong US print could pressure euro USD to the downside, while a weak figure may allow the euro to recover some grounds. Traders should also monitor market sentiment and upcoming Fed commentary for a broader directional bias. Okay, regarding the euro, we already discussed. Let's take a look at euro dollar, Australian dollar, British pound, and spot gold. So euro USD, the trend is up. It just keep going up over here. This was a nice bearish trend channel, and what we got is price action actually managed to break out of this trend channel. So this is telling me market is probably going to rise up even further. Okay, it's going to rise up more over here. Next one is the Aussie dollar, AUD USD currency pair. Okay. Weekly chart, the trend is up. We got this false break down over here in price action, and after that, market just simply rallied up. If you check out the daily time frame, the RSI reading is not overbought. So we have this supporting trend line. Okay. And this trend line basically suggests that we have a nice uptrend going on inside AUD USD currency pair, and I expect further upside in Aussie dollar. Next one is the British pound versus US dollar, GBP USD currency pair. So regarding the daily chart of pound dollar, we got some crack over here in this uptrend. Now this looks like to me market is going to provide us, I would say, a pullback, something like this. And from these highs, expect the second leg to the downside. And why is that? What is the reason behind it? We have this resistance up over here. So price action is most likely going to provide us some resistance at or around 1.3629 level inside GBP USD currency pair. So this is the level to watch out for a potential top and a drop in price action of GBP USD currency pair. Next one is the spot gold. Okay, spot gold, the trend is up and I expect further upside. I don't think spot gold is going to drop. The way I see it, just keep going up, up, up over here. Regarding the daily chart, if you draw a simple trend line over here, here is a simple bullish trend line over here. So you can notice that market is supported by this bullish trend line, and it's quite possible that price action is going to rise up more in coming trading days. Okay, so what we have learned today? Well, we discussed about the German flash manufacturing PMI, um, and then we also discussed about the core durable goods orders related to USA. What you should do next? Well, stay tuned for the schedule of next week's trading webinars. Subscribe to our social media pages to stay updated with true exciting events, trading content, and market insights. If you want to learn more about trading, visit TradeGeek and access free trading courses for beginners, intermediate, and expert traders. Thank you for hanging around. See you at the next trading webinar on Tuesday, July 29th, 2025 at same time, 12 p.m. UTC time. So that's it for the time being from my side. Have a nice day and bye-bye.